Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. It's the quarterly season here, and we want to talk today to Osisko Gold Royalties, and Sandeep Singh, the CEO, is here with us, to give us an update on that and to discuss several items. Hey, good morning to Canada. How are you doing?
Hi, Jochen. I'm doing very well. How are you?
Perfect. Thanks. All good. And honestly, I really like what I see. Your quarterly numbers were, again, records with record operating cash flows. But what I most liked was that you have risen the dividend by 10%.
That's right. And yeah, we had a fantastic quarter. You mentioned, it was records on a number of fronts. We had record revenues, obviously, that flowed into record cash flows, et cetera. And we've been telling shareholders that returning capital to them is a priority for us. With a 97% margin business, we can do that no matter what the market is doing. So we felt it was a good, based on the strength of the portfolio, and also to signal to investors that despite the volatility that we're seeing in the markets, our business is exceptionally strong and it can continue to deliver dividends to them. It was already a peer leading dividend, and as you point out, we were able to increase it by another 10% last quarter.
Fantastic. So do you plan maybe also to buy back some shares? Because I think your stock price is way too cheap.
I agree. We have a buyback in place that we've had since January. We were active in it a little bit earlier in the year. And at these prices trading below NAV, you could expect us to be active in it again. We've been very clear that when our stock is as depressed as it is now, we'll step in and we'll buy it. If we are the cheapest royalty exposure we can buy in the sector, we will certainly take advantage of that.
That's definitely the good idea, I would say. Fantastic. What I also saw, and I found that really interesting, I must say, that you have also enlarged your credit facilities by altogether, I think it was $150 million or approximately. And I think you have lowered the interest you have to pay, which is great, of course. But on the other hand, you enlarged the credit facility. So is there something going on, some bigger projects you want to finance or to do with a big royalty?
Yeah, look, I mean, it's a couple of reasons. First off, we are a much different and a much better company, more diversified, larger than when that credit facility was put in place the first time. So we were able to increase the size, as you say, increased it from 400 million Canadian to 550 million Canadian. The credit facility was largely undrawn. It remains largely undrawn. We didn't take down more debt. We just kind of increased our ability to, and also reduce the cost overall. So provides us the flexibility for, as you say, more deal flow in the sector. The deals in the sector are getting bigger. That's obvious when you look around. So we do have that flexibility if we see value. And just by virtue of reducing the cost overall, we thought that was a good thing to do to be ready for deploying more capital, which is our business basically.
Fantastic. Do you think you are facing now much more competition? Because I have the feeling we get more and more and more royalty companies entering into the market. And what do you think would set Osisko, with your business model, your technical experience, let's say, aside of them?
Yeah, look, it's clear there are a lot more companies in the sector, especially kind of this time last year. There was a lot of new companies starting out. You've probably heard me say this. I wouldn't personally want to be starting a royalty company from scratch in this market. It's a tough market to be looking for royalties. It is a competitive business. And a lot of us have a bit of a head start. So it's a tough market to start a new company from, although some people have done it. Some are doing a better job than others. For us, we're not so focused on what they're looking for as a new entry. Those newer companies are looking for earlier stage exploration or early stage development type assets. We get those through our network. We get the early stage exploration pipeline through our network. If there's a geo working on something interesting somewhere in the world, there's a very high chance that they're going to contact one of our geos and want to brag about it and want to share it. And the Osisko endorsement from a technical perspective still matters in the sector. We're the only royalty company that's more than just a check. So that's how we differentiate ourselves. And on the bigger end of the spectrum, the competition is really still the same. It's still the Francos, Wheatons, Royals of the world, ourselves, Sandstorm. Triple Flag was private, now they're public. but it's still kind of the same group looking and able to do transactions for large sums of cash. So that really hasn't changed much. The biggest competition for us, honestly, Jochen, is the equity markets being open. And in 2020, they were wide open, and we saw a lot of people that might have otherwise done a royalty or stream go raise equity. This year, it's been harder for them to do so. So I think we're seeing a better pipeline of opportunities for us and our peers as well.
Fantastic. So I saw already that you have invested 26 million US dollars into 6 royalties you have acquired and 1 precious metal offtake from 2 private sellers. So what can we expect from those transactions? Meaning, when do you think the first cash flow comes in?
Yeah, so what you're referring to is the acquisition of largely a package of royalties around an asset called Spring Valley in Nevada. It's held in private equity hands, but it's multi-million ounces of good grade. It's a real asset in one of the best jurisdictions you can get. So for us, we were very happy to pick up. We already had a little bit of exposure to that asset, so we knew it better than most, and we were able to go increase that royalty pretty significantly to the point where it's now about a 3% NSR. We expect that asset to be quite sought after by anyone looking for growth in the Americas, and coming out of private equity hands eventually into the hands of an operator that will build it. So don't have a timeline, but expect that to kind of be a middle of the decade, next several years type event. But even so, very good asset that we got for good value. So happy to have it.
Fantastic. So it adds up to your, let's say, midterm planning to grow the company.
That would be in our midterm. I mean, the good news for us is we have growth. We have interesting assets everywhere in our portfolio. We've got some very near-term growth that's on the horizon. We have those midterm type assets that will hit us in the middle of the decade, and our long-term optionality assets as well. The things that you don't have exact visibility on timeline, but they're real assets being pushed forward by real people. Those are also advancing quite well. So we're quite well positioned throughout the entire portfolio.
Fantastic. Then you entered into a royalty transfer agreement to purchase 2.75% NSR on the Tocantinzinho gold project from Eldorado Gold. That's also interesting for me. So how did that come that such a big company like Eldorado does deals like this? And let's put it maybe in a broader context, because we had several viewers asking us, how does it come that companies really where you think they have the finance power to do it by themselves, that they come to you guys, for example, and say, hey, let's do a royalty or a stream deal?
Yeah, I mean, a couple of things, I guess. Maybe I'll separate that question, because, so you're right, we bought the Tocantinzinho, and we call it TZ because it's a bit of a mouthful, project in Brazil. Again, multi-million ounces, good grade, really nice asset that have been around in Eldorado's portfolio for a while. That royalty we acquired from a third party. It wasn't directly from Eldorado, so it wasn't us buying that royalty for cash. We bought it to Eldorado. We bought it from somebody else. But what we saw there was just what I explained: multi-million ounces, good grade, needing another operator to move it forward. Eldorado has obviously gotten distracted by some of their assets in Greece, which are more important to them. They're active in Canada. This was just a non-core asset to their portfolio, and they've been very clear about that. So we like the asset. We picked it up at good value, very good value. And no sooner than we picked it up, a group called G Mining Services in Canada is acquiring the asset from them, and they're raising money. They'll be pushing it forward. Those that don't know G Mining, they're an exceptional mine building team. They've been consultants to many in the sector, including the biggest companies in the world, Newmont, etc. So they'll be building that asset out. And that will fall into the in between the near and medium term for us, based on what we're hearing for them. So nice asset. And if you see a theme, Jochen, I would say that theme is, we're interested in assets that matter. Large assets, good grade, good jurisdictions from a mining perspective. That's what our entire portfolio is built out of. Those are just a couple more examples of that pipeline.
Okay. And why do you think the big companies use it more and more?
Yeah, sorry, the second part of your question. Just generally speaking, I think it's clear that that royalty and streaming is become a core part of financing the mining sector. We've had periods where equity and debt's not as available. You've seen big companies use it. Now it's less a function of they absolutely have a need. Balance sheets in some of the bigger companies are better. They have access to capital, debt's available. The truth is, our royalty and streaming capital is competitive. The cost of capital advantage that we have over some is real. And if we can share that cost of capital advantage with producers, even in some cases, big producers, they're certainly willing to listen. So I think it's just become a much more accepted part of the financing options, and I don't see that changing anytime soon.
Fantastic. Then I saw with Go Gold Resources, you did like a convert agreement that you had an offtake for gold and silver, and then you did that into a life of mine gold and silver stream. That's something I have not seen that often before.
Yeah, well, we've done it a couple times in our portfolio. We had this was our last producing offtake, and offtakes, without getting too complicated, they're like royalties, except they're a little bit more complicated. You sell at a high price, but your cost on that ounce is also high price. The delta is what we keep. So it's valuable, but it was from a financials perspective, it was a bit cumbersome for us. It was a bit cumbersome on their accounting as well. So it's just a small example of where we converted an asset for similar value. We traded value, but turned it into a better structure for both us and our partner. And I think, just generally speaking, we are trying to be flexible partners for the groups that we're involved in. When things don't work, we're open-minded to tweaking them a little bit. And this is just one small example of that, where by doing this conversion from an offtake to a stream helps us. It helped Go Gold. They've been doing a great job with their tailings reprocessing. And in the process, we were able to turn a capped offtake into a life of mine stream. So adding some exploration upside or some further upside to our existing instruments. So it worked out well for everybody.
Fantastic. Great. Then let's move to your, I would say, biggest new venture, I would call it, Osisko Development. I mean, you hold 75% on the company, so you are also consolidating the company
Correct.
In the balance sheet. And I assume things are going quite well so far. But I saw also you had this impairment on the Bonanza Ledge Phase 2 project. So can you please elaborate a bit? What does it mean? What happened there? And is it now all safe and sound?
Sure. So yeah, we do own 75% of Osisko Development Corp, which is now a public company. Has been since the fall, run by Sean Rusin. That's where we put the development asset, the main development asset that we had in the company called Caribou. Things are going quite well there, to be honest. The impairment that you referred to was obviously a non-cash impairment of a satellite project called Bonanza Ledge Phase 2. It was the part of the project, if you will, that's permitted today, and that could be mined through the small scale permit that they also have at site. So for us, that was the company taking advantage of the existing permit, the fact that they have a mill, to upgrade their mill. It hadn't been run in a few years. Again, without getting too complicated, there was a pag pile that was sitting on surface, so a historical liability. And through mining the underground, that gives them a place to put that underground, that liability underground, and get rid of it. So clean up an environmental legacy issue. So in the process, they also get to train their staff. So it's a small thing. The Caribou project itself is different. It's physically located separately. It's a different type of ore body. So this is a small asset that they're kind of playing with, if you will, while they permit and build the bigger mine. You might say, from an impairment perspective, historically, maybe the carrying value of that asset was too high. So now that they're cleaning up everything, it was just the right time to take the hit on the impairment side and like you say, clean up the story for future success. More importantly, on the ODEV side, what's important from a catalyst perspective in the next little while is that they're drilling to infill and add ounces. So the next reserve, which will be the first reserve, if you will be important. We look forward to that in the second half of this year, and then that will feed into a feasibility study in early 2022. So those are the key catalysts. Permitting is still on track after that for the middle of next year. So things are going well on Caribou, which is the main asset, and it's worth reminding people that they also have a really nice heap leach asset in Mexico called San Antonio, and things are going well there as well. That's 1 million ounces of 1.2 gram heap leachable, which is very high grade in heap leach the heap leach world. And they're working on permits to try to get that into production next year as well in a meaningful way. So that's two core assets that they're pushing forward, quite well for us.
Super. Last question. What is the outlook, let's say, for the rest of the year? And just given hypothetically everything goes the way we want it, meaning there are no interruptions or disruptions through COVID, just that you can do the normal business. How many gold equivalent ounces do you think you can receive by the end of the year altogether for the year?
Sure. Look, our guidance for the year is 78 to 82,000 ounces of gold equivalent at a 97% margin. The first half of the year, we've done almost exactly 40,000 geos. So we're tracking right to the midpoint of that at a 97% margin. You might have heard me say that we expect a strong and hopefully a stronger second half of the year. And that's by virtue of a couple things. One of our core assets is the 5% royalty that we have on the Eagle mine of Victoria Gold. They're going through ramp up, so they're just naturally climbing up the ounce ladder. And also in the first half of the year, they don't stack for a good 3 months, the coldest part of the winter. So they're always going to have a stronger second half than first half. So that's a nice dynamic for us in the second half of the year. As they're stacking up the entire time and as they're continuing to ramp up, we should get more ounces out of Eagle. We also have other small mines that are kicking in for us. For example, Mineral Alamos' Santana mine in Mexico, that should be coming online any day now. So that will add ounces in the second half that weren't there in the first half. So tracking to the midpoint of our guidance exactly, with an expectation that we'll have a strong second half to finish the year quite in good shape.
Fantastic. What is the status with Canadian Malarkey? Because I think there's also now underground going on or preparing for underground. And what would that mean for your royalty in the future?
Yeah, I mean, truthfully, that's the biggest catalyst for us in our portfolio. It's probably the biggest catalyst happening anywhere in the royalty sector, period. The open pit at Malarkey is still a fantastic royalty for us. It should generate 35,000 ounces for us of free gold this year and keep doing that till the latter part of this decade. And now Agnico and Yamana are building the underground. The underground there today is 14.5 million ounces of gold. They're building the infrastructure, a shaft and a decline to go access that ore. Currently, with only half of those resources, they've extended the mine life to 2039. So our flagship asset is good for 2 decades plus. As they get underground, they will continue to infill more of those ounces and convert them into the mine plan. The asset is also open at depth. They're putting out some 1,000-meter step-out holes that are still hitting in grade. They're finding new offset zones that could be potential brand new pockets of mineralization. And the pockets at Malarkey Underground are big. Those aren't small pockets. So a fantastic place to be, honestly, for us, where our flagship is good for 2 decades and is growing in leaps and bounds. Literally every time we hear or we talk to Agnico and Yamana about it, the story is getting better. And there's an awful lot of drilling on it this year. So we continue to expect that to be the case.
Super, perfect. When do we see 100,000 gold equivalent ounces per year?
It's on the come. It's on the come, Jochen. I mean, we've got, when you think about, take the midpoint of 80,000 geos this year. We've got the ramp up at Eagle coming ahead of us. We've got Mantos, which is going through an expansion. That's a really important asset for us that we like in Chile. They'll be completing that expansion very early next year. It was supposed to be end of this year. Now it's very early next year, which really doesn't matter in the grand scheme of things. They've had a few COVID delays. That's an extra 6,000 geos, give or take, for us on top of what they already generate. And then we've got big assets like San Antonio, that's almost 10,000 geos, Caribou, that's almost 10,000 geos, Windfall, so on, so on, so on. So I think you'll see that mark from us in the very near term.
Super, perfect. Thank you very much, Sandeep. That all sounds very well. And I think the company stands on several very solid columns. And I like the conservative approach also with financing and not taking too much debt by now if it makes no sense. That's fantastic. But you have the firepower to execute if needed. And that is the right thing. And especially keep on rising the dividend. We like that.
Perfect. All right. Well, thanks for your time, Jochen. And stay safe and enjoy the rest of the summer in Europe. Hopefully we'll be able to come see you sooner than later.
Yeah, that would be fantastic to
Yeah,
have at least some nice dinner together and some drinks, because we haven't seen us for such a long time. And
yeah.
yeah, but as I said, I have a very bad feeling that that might be PDAC next year, but we will see. Hopefully, it's earlier. Yeah, stay also safe, please. Thank you very much for your highly valued time, and I would say we talk very soon.
Perfect. Thank you, Jochen. Take
Thank
care.
you. Thank you. You too. Yeah, ladies and gentlemen, that was Sandeep Singh, the CEO of Osisko Gold Royalties, and you heard it. The company is in perfect shape, 97% margin. I mean, this is something which is really, really rare. And yeah, they are doing everything right. They have a super large pipeline, and yeah, things are improving and moving fantastically how they planned and how they wanted. And I must say, now with rising the possible credit facility here, they have so much firepower that they can execute also in big projects, and that's exactly what we want to see. The dividend was rose by 10% already this quarter, and I have a good feeling that this will happen also in the near-term future again. So yeah, let's see. The share buyback is also an option that helps also the share price. I would suggest you have a very close look onto this fantastic company. Thanks for watching us, and bye-bye from Switzerland.